Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thank you as always for coming on the program.
Happy to be here.
Well, let's start with Wall Street, where stocks saw big gains overnight after Fed Chair Powell's speech indicating that interest rates likely be rising more slowly. Tech stocks on the Nasdaq up in particular. They're more sensitive to interest rate moves, up 4.4%. What's the story in the global markets?
Well, as you said, the Chairman Powell's speech made a very big impact on the market. Nasdaq, as you said, went up by more than 4%. Dow went up by 2.18%. S&P by 3.09%. So if you just look at the last month, U.S. stock indices are doing very well. Dow is up 5.9%, S&P by 5.8%, and Nasdaq by 5.3%. Year to date, though, they're still down. Dow year to date, it's down 5.5%, S&P by 14.9%, and Nasdaq year to date down by 27.5%. Now, Chairman Powell's news was, I don't think it was entirely unexpected, but it was reassuring. If we look at the September's dot chart, the dot chart said that at this year's end, the rate will be around 4.25%. And the market expectation was that they will raise 50 basis points in December. That expectation was around since September, so the expectation was confirmed. If we follow the scenario that was set out during September, there should be one more rate increase of 25 basis points early in 2023. But now, at least that portion of the expectation is in doubt. The Fed officials had said that they may need to increase interest rates more. So the interest rates now may top out at 5 to 5.5%. So in a sense, we sort of traded. We now know that the rate of hike for inflation will proceed at a slower speed. But now we're unsure about when it'll end and when it'll top out. In addition, there seems to be some argument developing between the hawks and the doves on how much and for how long the rate should be raised. The reduction of inflation is good news, but the labor market may still be a bit too strong for Fed's liking. The latest U.S. job opening and labor turnover report for October, it showed that job vacancies are still very high at 10.3 million vacancies. But that was down 353,000 from September. So the number of job vacancies are falling, but very, very slowly. And the job vacancies are still above where it was in 2019, which was around 7.5 million vacancies. So the U.S. job market is still very strong. And as you mentioned in the last story, U.S. consumption is still very strong. They seem to have done very well during the Thanksgiving shopping period. So we may be in perhaps for a slower increase in interest rates, but longer than what we expected in September.
Well, now, Korean stocks started out today with a big gain as well, but on the KOSPI, that gain was quite a bit smaller by the end of the session. Shares of Kakao and Naver leading the gains. The big story, perhaps the exchange rate coming down to about 1,300 because of the Fed signaling slower rate hikes. Tell us about the domestic market, Professor.
Right. The domestic market was affected as well as European and Asia markets. They've all done very well because of Chairman Powell's speech. KOSPI at the end of the day went up by 0.30%. It ended today at 2,479.84. But actually, the stocks KOSPI did better at the beginning of trading. It started above 2,500, but it fell during the day, but it still ended up at a higher position than where it was yesterday. KOSDAQ went up by 11.06%. It ended today at 740.60. Like the Nasdaq, because it is tech-heavy and interest rates, tech-heavy firms are sensitive to interest rates. KOSDAQ did considerably better than KOSPI for both indices. Individuals sold and institutions and foreigners bought. For the last month, KOSPI is up 6.12%. KOSPI is up 6.20%. But year-to-date, KOSPI is down 17.03%, and KOSPI is down 7.03%, and KOSDAQ is down 28.64%. And as you mentioned, Korean won, it ended today just slightly below 1,300, 1,299.50. It appreciated today by 1.48%. This is the first time that the market ended below 1,300 since August. And it seems that people are taking comfort in the fact that the U.S. will not raise the interest rate as quickly. And it seems that at least some of the very high rate increases that we saw during the September and early October was perhaps a bubble that's working itself out. But still, because of the interest rate differential, we'll probably see the weakening of the won from here on out on the average. But hopefully, it'll be very, very slow depreciation of the currency.
Right, big moves on the currency the past few weeks. Well, Professor, the Korean economy grew in the third quarter. We see today it was 0.3% from the quarter before. This is slower growth than we saw in the second quarter. We continue to see a recovery in consumer spending, for one thing. What's the picture in terms of growth for South Korea in the third quarter and going forward?
Okay, well, this is the preliminary numbers, which is actually the second guess at the numbers. The first guess was called advanced figures, but those figures were also 0.3%. The final numbers will come out, I think, next year. So this will be the best numbers that we have for a while. If you look at the corrections that were made between the advanced and the preliminary, consumption is now slightly lower. It fell at 1.7%. Construction was considerably lower than the advanced figures, and right now it seems like it fell by 0.2%. Facilities investment, luckily, was considerably higher than the numbers given in the advanced figures. It's, in the third quarter, it seemed to have grown 7.9%. And industry-wise, manufacturing fell by 0.8%. So the numbers are roughly equivalent to what it was during the advanced figures, but consumption is slightly lower. We sort of expected that. The happy news here, though, is that facilities investment is considerably higher. Now, numbers that were not available during the advanced releases is the gross national income, which measures the Korea's output not from how much it made, but how much income it generated. And sadly, that fell by 0.7%. And that's mostly because of what happened in the exchange rate and the terms of trade. Because Korea's export prices fell while import prices rose, if you compute Koreans' total income over the third quarter, it seems to fell by 0.7%. Now, the government claims that the annual target of reaching 2.6% growth is still on track. We may get 2.6 growth even if we have a slightly negative growth in the fourth quarter. I'm not as optimistic as the government official that made the calculation. It seems like for the rest of the year, we'll probably see more fall in consumption, more fall in exports. So hopefully we'll make 2.6% growth for the entire year, but I wouldn't count on it.
Got it. All right. We'll see how that plays out, Professor, and get your insights on it as always. Thank you for coming on the program. We really appreciate it.
Thank you.